Hi everybody, I hope you're all doing well. This video is intended to help you as we come through these final stages, hopefully, of our quarantine time. It's actually been incredibly busy in real estate, which is why I haven't been making very many videos. Surprisingly, we've been able to keep moving forward, and that's been wonderful. So one of the things that I hear a lot about as I'm out in the real estate world, well, not really out, but out mentally in the real estate world, is forbearance and mortgage payments. And I just wanted to come on and do a video for everyone with some considerations because it's really crucial stuff and it's going to kind of make or break your real estate future depending on how you choose to do and how informed you are as you move through this. I think we're up to about 5 million loans currently in forbearance across the country, which is an incredible amount. And it's really not as simple as just clicking a button saying delay my mortgage payment. And I just wanted to quickly explain that and some of the outcomes and some of the alternatives and the effects this could have on you and your life and your real estate life. Just so that you or a friend or anyone that you know that you hear of talking through this, you can speak to knowledgeably and hopefully provide them some advice that will serve them well in the future as they decide to make these big decisions. So basically, forbearance traditionally means some sort of payment halt, and to do that, there is going to be an outcome. Banks aren't in the business of just being nice and forgiving this money that is owed to them. That's just not what they're doing here. So it might seem like they made it really easy for you to take this forbearance option, but that I can assure you is not their end goal. Not that they're bad monsters, but they are owed money and they're going to be paid. So when you accept a forbearance, you need to know what the terms of that repayment are. So what we're hearing a lot of is that banks are saying, it's okay, you don't have to pay for 3 months. We'll let you know what the terms of this are gonna be later. That's nice, but just know one thing, that the bank is gonna get their money. And they're gonna get their money in one of 3 ways. The first way is the only way that you should be taking the forbearance if you can afford to continue paying your loan, which is that they're going to move those payments to the end of the loan. So you'll pay a little bit more interest over the life of the loan, but ultimately they're just delaying those payments until the end. So if you can afford it, but it's more comfortable not to, and you want to take them up on that offer, so be it. That's the best outcome. That's not really what we're seeing though in these terms. Mostly it's an unknown repayment plan. So more than likely, they're going to do one of 2 things. They're going to make that balance come due when your 3 months or 4 months of forbearance is up. And that balance is going to be hefty, especially if you're unemployed currently. So, and then the final option is that they're going to say that you can have the ability to adjust your loan terms and get on a modified payment plan. That sounds great, but that's not easy to do. You really have to prove hardship, and they're going to make you jump through hoops to do this more than likely. So I think that everybody is kind of waiting and hoping that this just goes away and it just gets tacked on to the end of their loan, but just be aware that it's not probably going to be that simple, and you need to be prepared and understand the choices that you're about to make. So first of all, if you have taken a forbearance, get out that document and please send it to me if you want, and let's look over those terms together and see what options you have. If it says that we're going to figure out those options at the end of all this, you need to know that the one you want is to tack that payment onto the end and not to pay it in a lump sum, unless you have the money, which if you do, then I don't know why you're in forbearance. But if a lump sum comes due, then that payment is due. And if you don't pay it after a certain amount of time, you are going to go into foreclosure. Here's why this is so scary during this time. Right now in 2020, a lot of people have equity in their homes. This was very different from 2008 crisis when a lot of people went into foreclosure. They went into foreclosure and I don't want to say they didn't care, but ultimately most of those properties were underwater. So they went into foreclosure because they were worth less than what was owed on them. In the position we're in right now, it's very different. most of our homes are worth more than what we paid for them. Only the people who have bought in the past 2 years are sort of at that top, because we don't know where the market's going to go. It might continue going up. It has been. It might crash. We don't know. So, but most of us right now have some good equity in our homes who bought before 2017. The problem with foreclosure is the bank doesn't care about that equity and what you're owed. They don't care. They care about what they're owed. And if you truly go into foreclosure, they're going to sell it for what they're owed, and they're going to make it an attractive purchase for an investor. Also, if you're in forbearance, guess what? You can't refinance. You can't take that cash out of your house anymore until you're caught up on those payments. You don't have that to fall back on. You can't open a HELOC or a home equity line of credit. If you're unemployed, you can't do these things. So there are far more considerations than just to say, oh, I'm not going to pay my mortgage for a few months, free ride for me, this is great. There's so much more to think about and to consider. The home equity thing is huge. You could lose your equity. I mean, there may be no other option, but just consider that before you think about some of these terms that could cause the bank to really come after you, because again, they don't care about your equity. They don't care about you having the ability to pull that money out of your home as an alternative. I mean, forbearance or doing a home equity loan to pay those mortgage payments, which is better, which is worse? There are things to consider before you just sign on the dotted line and let the bank have the control. So obviously, you know, there's CPAs, financial planners, bankruptcy attorneys. There's a lot of people that you would want to talk to depending on the situation. But the point of this video is just to get you thinking bigger and understanding that this isn't as simple as just a break on payments. So what I've been offering to people, I don't even care if it's an anonymous mailing. Mail it to my office if you want me to take a look at your forbearance agreement, or for a friend, or just have a conversation about all this and about what your particular situation is in. It might make more sense for you to do a cash out refinance right now and to take that equity out of your home if you're employed. It might make more sense for you to sell. It might make more sense for you to take the forbearance. So there's just a lot of things to consider. So this has just been an ongoing discussion. A lot of real estate discussions have moved towards this type of talk and strategy around when to sell, what's the market going to do, and all that. So I just wanted to make you aware of all the pros and cons and offer to have a deeper discussion about this based on your specific situation. So again, I really hope that this video finds everyone doing well. We are entering phase 2 in real estate this week, which honestly doesn't really change much for us. We've been doing things all along, except now we can, if we absolutely have to, we can physically meet one-on-one with social distancing and safety procedures in place. But really, we've been doing what we're going to continue to do with all the virtual stuff all along. So it doesn't change much for us, but as things continue opening up, we do expect, obviously, to get back to somewhat of a sense of normal here. But the long-term outlook, we still do expect that inventory is going to start flooding on, which is going to be great for all these buyers that just can't find a home. And for sellers who have waited though and are kind of uncertain, it's going to be a more uncertain territory in terms of what pricing is going to look like. We know what pricing looks like today. In 6 months, we really don't know. We think that this inventory flood is going to affect prices combined with the economic fallout that's sure to happen from all this unemployment. So that's what we think is going to happen, is that prices are going to start trending downward from the moment we open up until the next 6, 12, 18 months. So anyways, if you want to talk through any of this, we're always here. We have our finger on the pulse of the market. So at any time, just reach out and we'll be here. Stay safe, everyone.